The mighty State Bank of India has always been seen as India's big bank that spreads across the length and breadth of the country with, some 20,000 branches. But SBI's new avatar is that of a nimble digital bank. Its just launched app, YONO, already has 5 million registered users, and its SBI Anywhere app has 10 million registered users. So today we have with us the Chairman Rajnish Kumar to talk about a new SBI altogether, the nimble digital SBI. Thank you very much, Mr. Kumar, for joining us in this new approach you have for banking. Just tell us, in your mind, what are the highlights of the new digital SBI?
So new digital SBI has many things.
Okay.
One is what we do at the back end in terms of data analytics and using the data. SBI has one of the richest bank to have the huge database, because we serve almost more than 420 million customers. And we are very proud of this fact that almost every third Indian is dealing with the State Bank of India. And in corporate banking, we are very big, in a small business, agriculture. And the power of data analytics is still to be unleashed. Yes. And we are very systematically working on that. And using the power of data analytics, both what we call internal and external, many products are now being designed. What you spoke about YONO, that is a front-end mobile application where the customers can do now almost anything relating to banking, as well as their investment, insurance, card, online shopping, book and order. And anyone who has used this application, they are very delighted. It is getting a lot of traction with the millennials.
So I want you to walk with me, because we want the ambience of your beautiful lawn also to be available to your viewers. Just to expand on this, how much have you all spent? I mean, if you can give us a cost-benefit analysis, are you able to, if you can give us an idea of what is the expenditure and how much have you been able to draw in terms of?
So basically, even for YONO, which we are talking about, we have a separate P&L account. Whatever investment we are making, that is all accounted for and amortized. And in terms of revenue generation or the cost saving, all is being accounted for. All major projects we are trying to put in this philosophy of drawing a separate P&L. It is a notional P&L.
Of course.
But in today's time, whatever we invest in technology, that is all an investment. And it is not a cost.
So how, what kind of benefits have you got? Have you, you don't have to open fresh branches. Is that the advantage? Have you been able to close down some branch? Is that the advantage? Or have you been able to pull out some staff from back end and put them as sales officers?
So that is the main advantage. Say, for example, savings bank account. Before the Supreme Court judgment came, we had started opening 25 to 27,000 accounts daily on YONO. If all those accounts are to be opened at the branches, at least we will need 3,000 people. So that is the advantage in terms of many ways, like whatever surplus staff is there. So they are available for sales, services, advisory. As of now, we have not closed down any branches because we are moving in a big way in digital. But the format of the branches is undergoing a change. They are much smaller. And going forward also, the presence has to be felt across the country. And the model which will be there going forward is that the digital becomes the main platform, but at the same time there are branches where people can go get advisory, hand-holding. So both will coexist.
So you'll have much smaller branches?
Much smaller branches in format.
So you'll be selling off land? Is that,
if there is any surplus land, then it is there. But sometimes, like if it is a rented premises and the premises is huge, then you can go for a smaller premises also, but it all depends upon the location and but savings are very much
already generated, or you are drawn?
One is that our overheads, so it will be reflected there that our overheads are very much under control.
Lesser use of air conditions,
everything. All expenses go down.
Let me come to the customer. Are the customers now, able to get, say, what, 3-minute loan, 6-minute loan, or 15-minute loan? The way has your data mining reached that stage?
So if on YONO we are sending the pop-up for pre-approved personal loans. and that is instantly available.
Okay.
Similarly, loans against, say, fixed deposits.
Okay.
So one doesn't have to go to the branch either to open a fixed deposit or to get a loan. Okay. It all can be done on the digital platform. Same is now we are building journeys around home loan, car loan, education loan, salary loans. So what, as I've said, that the vision is that within 2 years' time from now, we have already spent 2 years and 2 years more, it will be a complete bank. All the processes will be digitized and available on YONO.
Are you seeing a lot of your retail guys not coming to branch at all? I mean, will you go to the extent of penalizing them if they come to branch?
Not at all.
Okay.
So our philosophy is that it is customer's convenience.
Okay.
Whatever is their comfort level, if they want to come to the branch.
For instance, many of us would not have gone to a branch in a very long time because you can pay all your bills on the net.
Everything. So you don't need it, but still there is, as I said, that
but you're seeing that transition.
But still there are, the footfalls in SBI are very high.
Okay.
Because the customer segment we serve, so it is across.
Yes.
So there is a certain set of segments, customer segment who will not come to the branch and will be all using internet banking or mobile banking.
Yeah.
But there is a segment of customers who still come to the branches.
Yes,
So that's what I said, that for a bank like State Bank of India, where we are catering to the customer segment underprivileged to the, I would say, richest. So in that scenario, all are needed. There are many people who are not comfortable with mobile banking, not comfortable with even debit card or ATM card. So we have to take care of those.
No, I can imagine if my father were alive, he would not have been able to do it. He would still have gone to the branch to get his pension or whatever. But what about cost savings in terms of any number? For instance, by the end of this year itself, will you see it reflected in a lower cost to income? I think now cost to income is getting higher because of provisioning. But do you think by, say, FY20, you can distinctly...
say by March 21.
You can distinctly see cost to income.
Our internal target is we should be able to bring it down to 40%. But that is a bit, I would say, ambitious, but not entirely impossible. And that will be, of course, driven by, one is definitely the revenue growth is very much there. It is back. There is a complete control over the cost. Plus the digital, and it is, digitization is not about YONO or front-end application. Even all the branch processes are getting digitized. It is some sort of an omni-channel experience where whether it is on the mobile or portal or the branch, the experience will be identical.
Do you see a time when you will not have to recruit, or has it already come, that you don't have to recruit a large level of force? I mean, you may still want high technical personnel or corporate investment banking personnel, but the lower level of personnel, lower skilled personnel, you don't need to recruit at all because you are redeploying?
Whenever who is coming, they are highly skilled, let me tell you. Even if it is at a, what we call junior associate level, the qualifications are very good. They all are tech savvy, young, pleasant people. But every year the retirement is 12 to 13,000. Okay. So we can't leave that gap. So
no. Do you have to replace the entire 13,000?
Not entire. Maybe up to 75% as of now.
Okay.
So every
that
year
itself is lower cost to income.
Lower cost to income. And one is that because the new people who come, their salaries are much lower than the retiring people. So that is one aspect. And the other is that the number of people itself will go down, but progressively. If we don't recruit, then what happens after 2-3 years? There is a huge gap at the mid-management level. That is what we saw when there was, for 3-4 years, there was
the missing middle.
Missing middle. So that was a big mistake to completely stop the recruitment. That should never be done. But yes, the number of people to be recruited, that can be depending upon the progressive.
Okay, actually, you must have seen that now famous Morgan Stanley report, which expects that you're going to have a huge saving in terms of provisioning. And as you just said in passing, that loan growth also has picked up. So there are three big factors in that case. Loan growth has picked up.
We are now more than 14%.
Okay, at the upper end of your guidance.
Yes.
And you have got, provisioning perhaps which will tough out.
Which will taper down.
Okay. At which quarter does it taper?
It has already started happening.
Okay.
And one is that even when provisioning, there are two things. One is minimum regulatory, what the regulators prescribe. But our approach has been go beyond that and do a little bit upfronting of the provisions. So that the current credit costs, they don't get loaded on the future earnings. So that is the whole approach, that as much as possible, the future earnings should become less volatile. Because in today's time, even if we show profits or this thing, so market is ready, everybody believes that we are passing through the challenging times. But what now we don't want to do that there should be any problem in future as far as banks' earnings are concerned. They should be steady and stable.
Yeah, exactly. Just to complete this argument of 40% cost to income, there are three factors that are going to help you: loan growth, your provisioning coming drastically down by the time you're mid FY20 perhaps, and thirdly, all these digital investments are going to start giving you cost advantages. So even if you don't get to 40% cost to income by 21, what would be a more realistic figure in FY20? A good 5 percentage point fall or 4 percentage point fall?
45 to 46% is what we should be able to achieve by March 20. And that seems to be feasible now.
Okay. Fine. On that note, we're going to take a break, sir. And thereafter, we have to ask you about the more pressing questions, whether the NBFC issue is behind us and therefore whether there is a genuine turn in the economy. We are back in this beautiful ambience of the SBI Chairman's residence in just a minute with lots more questions to him.